I'm dying to know what your payoff is right now.
Oh, trust me, I know I'm about like 25 grand upside down.
So you have 90,000 plus worth of car loans and you make 80,000.
Correct.
How?
There's a strange belief out there that if you're buried in negative equity, another car might somehow fix it.
I had a 2019 Dodge Laramie Ram. We rolled over the negative equity onto this Tesla Y. I did a 72-month term, 9.5% APR. Total loan amount was $71,159.76.
Jeez, dude.
So absolutely ridiculous. I was at a time of desperation. I just needed to get into something.
I'm dying to know what your payoff is right now.
Oh, trust me, I know I'm about like 25 grand upside down.
If you're actually desperate for a car, you don't go out and buy a new Tesla. You find the cheapest reliable option that gets you around, especially if you still owe money on the last one.
What is the Tesla value at?
These things have tanked. I'm looking at 22, 23, 24. I got to have my team take a look at it, but that's just the ballpark. What's the payoff on the car?
$47,084.89.
So we've done this stuff before. My only question is, does this make sense for you?
This is where my head's at. I just paid off a year. So now I got to be paying $988 for the next 60 months.
That's 60 grand.
That's what I'm saying. So if I could pay less for a lease in 3 years and get out of it, I think that's a win for me.
To me, a win is paying off the one you already have and driving it as long as you can. A lower payment in the short term doesn't mean you're saving money in the long term.
Let's do some quick math here. Option number one, we go with your gut and put you into a new car lease. I'm thinking a Ram 1500. They're heavily incentivized right now. You have to go up to maybe 1,100, 1,200 a month minimum. That'll still be less expensive because that'll cost you 44 grand over the course of that lease. If you did keep that Tesla for the full term, the resale on that car would probably be about maybe, I don't know, 8 grand, 10 grand, depending on the miles.
Man, I'm telling you, I put about 30,000 miles in my first year of owning it because I didn't have a work truck. By the time my term's done with that car, I'm going to have well over 200,000 miles on it.
You did the textbook thing of what I would say never to do in your case. So I would say definitely we got to look at getting you out. It's not going to be pretty. That's all.
Right.
For some reason, the first instinct isn't to pay it down. It's to refinance it, roll it, trade it, or replace it. Just anything that feels different. The problem isn't the car, it's the balance. And getting into another loan doesn't erase the balance. It just moves it.
Whether it's car or whether it's payment, you got to bite the bullet somewhere.
Yeah, I'm already paying pretty much $1,000. So for me to pay $200-300 extra a month for the next 3 years, I think it's better than paying for the next 5 years. I would be interested in the Cherokees, the Grand Cherokees, Wrangler maybe, or Bronco.
The problem is you cannot just simply get whatever. It has to be a more expensive car.
This is where people keep making their situation worse. You need a more expensive car to roll in the negative equity. And when you do, you're usually in a worse off position than when you started.
Because the bank is not going to let you roll in $25,000 into a car that's $50,000, like a Wrangler. I'm doing this right now to get you into a Wrangler, you have to put 15 grand down with that kind of negative equity. It's not letting me do the max advance that way. It might have to be a truck because, like, for example, on a Laramie, and that's a delicate balance because you have to go with a higher trim to get the ability to bury more money, unless you want to put a whole bunch of money down. And even on the Laramie, it's not letting me do that.
I know there's maybe some cars with like incentives and rebates that might help eat some of that.
It's too much of negative equity. You have to put some money down. It's letting you do it on a Grand Cherokee, but your payment is going to be like $1,500 a month.
The best way to deal with negative equity is to avoid creating it in the first place. Interest is normal. Starting out buried isn't. Don't roll old debt into a new loan. Don't finance more than you need to. And don't stretch the term so long that the balance stays higher than the value for years.
On a 26 Grand Cherokee, I think it's just too much negative equity to roll in for these cars. There's not enough stuff going on to offset that. The bank's not going to let us do that. You can pay like a decent down payment. That's one thing. If you can't, I don't think in your specific situation, there's much to be done because it's just a lot of negative equity.
How much would I have to pay to top it off a little bit?
To be at $999 a month, you'd be at $16K out of pocket.
I guess I would just have to make like double payments on it, chop it off quicker.
Probably. Maybe revisit when you have less negative equity, I would say.
Maybe revisit this in the year when I have 2 years with the loan.
Yeah, dude, I think that's the best thing to do.
All right. Sounds good. I will work on that then. Try to get out of this.
All right, man. Stay in touch.
Making double payments helps. It chips away at the negative equity faster. But the goal shouldn't be to qualify for the next car. It should be to own the one you have.
Dan, I got a girl here. She's looking at the 24 Elantra.
Okay.
She just put in an app, so she wants to put $1,500 down.
Let's take a look at the credit. First glance is not great, man. We got a 512 score, sloppy credit card payments, but overall up to date with them, which is good. But there's definitely been some late payments on the credit cards. 12% available credit. So she's using those credit cards. What's really hurting her, it looks like there was a voluntary surrender back in 2021. as we know, that's as good as a repo. So
Bad credit, a previous repo, and her available credit is almost maxed out. It's a perfect time to buy a car if your goal is bankruptcy.
really not a lot of positive factors here. Preemptively, I would find out that can she get a little bit more money down, because $1,500 is going to be a stretch to get an approval. So see if she can get any more money down. I will submit it with the $1,500, but I'm going to jump the gun here and say they're probably going to need a little bit more. So find out if that's even a possibility.
All right, cool. Okay, so I talked to her and she said 1,500 is the absolute max.
Absolute max.
Yeah.
When the lender says we need more money down, what they're really saying is this is risky. And if it's risky for them, it's definitely risky for you.
Okay, I mean, listen, it is what it is. I'm gonna submit it. Again, I tell you guys all the time, I'm gonna tell you again, I'm not gonna tell you no, let the banks tell you no, right? So let me submit it. Give me 5 minutes and I'll have an answer for you. I don't know how. I was not very optimistic on this one, but Ally bought it. Ally bought it with the $1,500 down. It falls into their Ally Plus program, which is their new like subprime program specifically for subprime. They knocked it out of the park, I'm not gonna lie. 17.99%, which is the state max on a 2024. If this was a 23, should be at 21% all day long.
17.99% is knocking it out of the park for them, not the person signing the loan. That's the kind of interest rate that keeps you upside down for years. At that rate, you're basically buying the car and a second used car with the interest.
But they bought it and they gave me room for, warranty and gap. With a warranty and gap on there, I can get it done at $515 a month, 72 months, $1,500 down. How that's possible, I don't know. I really, truly was not optimistic. I thought that I was going to call you back here in a minute and say I need a cosign or way more money down. But sometimes, these banks surprise me.
That's nearly $39,000 total, locked in for 72 months. And when your credit is already weak and your balances are already high, you've basically committed all your time and income to debt. For the next 6 years, a good chunk of your life goes towards that payment. And that's on top of the debt you're already carrying.
Yeah.
Even after all these years, I still get surprised.
All right.
Yeah, go over that number with her, but that should be an easy sale.
Yeah.
That should be an easy sale. $500 a month for a 2024 car.
Sounds good.
All right.
All right. I just talked to her. To be honest, I think she's more surprised than you are.
She might be. So she's closed. We're good to go?
Yeah, we're good to go.
Cool. Give me insurance. Let's wrap it up.
Cool.
Good
Thank you.
job, man.
An approval when you're in this type of situation is one of the worst things that can happen. At least it was for me, and not just because of the added debt. Because I told myself it can't be that bad if they approve me. And I kept spending like everything was okay.
I'm 21 years old, 3 kids, 5, 2, and 34 days. I own a rental property, a duplex, and own the home that I'm living in. So 2 different mortgages, 2 different car payments. Finding myself payment poor, which is probably 90% of the phone calls you guys receive. Does it make sense for me to take a minor hit on my credit and give car payments back to receive more money in my pocket so I can keep the lifestyle for me and my wife? Or does it make sense for me to sell everything so I can get more ahead of the game, or just...
Payment poor is what happens when you build your life around monthly payments instead of around income. You don't collect a paycheck. Your lenders take it.
Let's go through your debts, all right? The rental property. What do you owe on that?
About 96.8.
You said you had 2 car loans.
Okay.
What are those?
45 and 48.
Are you upside down on those, or you got some equity?
Upside down on them hard.
How much? On the 48, give me that one first.
$8,000.
So you have $90,000 plus worth of car loans, and you make $80,000.
Correct.
How?
Because when I accumulated those car loans, I was making $130. Not that that's an
That
income
still hurts my brain.
jump.
Right?
Correct. It hurts
Okay.
my brain.
The problem with building your life around payments is that income can go down, but your payments don't. You're stuck covering the same numbers with less money.
How much are you upside down on the $45,000 car?
Probably closer to 12.
So it's only worth like 33?
Correct.
What's the rental worth?
It's about 130.
You clear $30K worth of debt just by selling that. It is not a blessing
Correct.
in your
And
life.
I'm in the process of selling it now. Other debt is about $8,000 in student loans, about $18,000 in credit card debt.
Here's the deal. I would sell this rental. You'll clear hopefully about $30K. That's the $20K you're upside down in on the cars, plus another $10 to get you a different vehicle. So that's going to clear the car debt. What are your total car payments?
Probably about $2,800 a month.
He's making $80,000 a year, and $2,800 a month is going to car payments. It's over $33,000 a year. Almost half his gross income just to drive.
Oh my gosh.
Yeah.
Okay, well that's going to free up $2,800 that you can
Correct.
now use to tackle the other debt. So you'll tackle the smallest debt first. So if you have a bunch of credit cards, I'm guessing those are split amongst a few.
Yep.
So whatever the smallest balance is, you're going to free up the $2,800, all the margin you can muster up from your normal income. Now with that freed up
Right.
$2,800, you attack the rest of your $26,000 in debt, student loans and credit card.
The easiest way to deal with that is to not pile it on in the first place. If you can avoid taking it on altogether, do that. Don't build your life around monthly payments. Leave yourself room because life changes. And when it does, you'll be glad you didn't commit all your income to bills. If you want to see more, you know what to do. I'll see you in the next one. Bye.